Hello, I'm Michael Glass from the FXcast Market Analysis team. This is our FXcast Market Analysis trading plan. In each of our videos, we try to identify high probability trading setups. We'll evaluate the gold chart to see if there's any leading sentiment. We will create a low volatility watch list, an inside bar watch list, and we'll review the economic calendar to see if there are any releases that could affect our open and new trades. As always, please send your comments and feedback to analysis@fxcast.com. As usual, we are starting off with the daily chart of gold, and as usual, we are in awe. I mean, look at that. Just beautiful. Whoops. Obviously, what we talked about before was, watching these wicks. We got above the wicks, and we have just taken off. And, of course, there is that great inverse relationship. As the stock market across the world are falling, people are finding safety in gold. We aren't, with our, sincerity, cannot give you advice on gold at this price. Again, it's about your risk tolerance. If you feel gold is it, then it's it. Gold did break 1800 today. So, as you can see, gold can go higher. It's just your risk tolerance. When we come over to our hourly time frame, we can see that we're a little bit overbought. And for the most part, we consolidated a little bit in yesterday's range, and then we've moved up. So what's important about this is that this seems to be, you can see the point of control here, 1752. As we watch that gets us within yesterday's range where the kind of peaked out at, what price level it peaked out at, and it gets us where today's range is kind of peaking at also, even though we moved higher. So gold looks great. Watch 1752 as it pulls back to see if we get some volume support. And other than that, just stand in amazement. So let's go on to the pound dollar. As we look at the daily chart here with the pound dollar, we talked about this range. We've been talking about it for a couple of weeks. And within that range, we talked about the top here, 1.645. And then we talked about the bottom right around 1.62. And we told you, look, we're in this tight range. Whenever it decides to break out of that range, be ready, be prepared. And so yesterday gave us a wick, but the buyers came back and found value. And today is a tell, because not only did we break it, but we're closing below it. So it's going to be interesting to see. We can see that the 200 moving average here, this orange moving average, is right at our previous support of about 1.61, 1.6075. So it'll be interesting to see if buyers find value here as they did here in the past. So in the past, in May and June, we found value at this 1.6075. Will that happen again as we kind of make sense for us to come down and test that? And notice also that is the backside of this previous downtrend line. So there's a lot going on there. As we come to our market profile on a 1 hour time frame, we can see that we are in a buy zone and that we're well below our long-term moving average. And we can also see that the dollar took control here. And at the beginning, we can see that we started to get a little divergence. Now the pound is moving up a little bit, which is allowing us to level off, even though the dollar is still continuing to move up. As we come down here, it's a little bit easier to see pound moving down, dollar moving up. If that continues, this pair will continue to move lower. And again, on our daily time frame, we're going to watch and see what happens at this 1.6075. How about the euro dollar? The euro dollar is a lot choppier. There is a lot going on in here. And as I said yesterday, now the pound dollar, we can say, moved out of the range a little bit and you feel a little bit better. The euro dollar is still in this range of, again, smaller time frames you can find a trade, but on these larger time frames you have to say this is just a consolidation mess. Sit on hands. As we come over, we can see on the on the 1 hour time frame that we continue to snake around neutral and our long-term moving average. So you would think as we now come underneath it that we will start to move back up as we continue to snake. But that doesn't necessarily have to happen because we're just in the neutral zone and we're just below the long-term moving average. Like the pound dollar, we can see that the dollar is in control here on the euro dollar, and we can see it once again, the dollar moving up and the euro making a stiff move lower. Um, but as in comparison, as we put them on top of each other, we can see that at least the euro is moving sideways, which is allowing price to hover instead of continue to move lower. So for me, I would really like to see us back on the daily, get out of this tight range, get above at least possibly 1.6. I'm sorry, 1.4 to maybe move up to 1.5, or at least get below these wicks here to go short. Otherwise, we remain in this tight consolidation range. This big move here, remember, was the first day of that big move down. Let's end with the dollar franc. And here we finally got a breathing day, and it's an inside bar. And as we look at this big push down, certainly we have to start thinking that the market is oversold. So, that doesn't necessarily mean that we're going to automatically move all the way back up here to 0.76, but it does mean that the market is oversold at these price levels. So as we switch over to our hourly time frame, we continue to be in the buy zone. We continue to be below neutral, continue to be below the long-term moving average. What we can see is that just by a fraction, the dollar took control, but the franc is still positive. So as we can see the dollar moving up and the franc moving down, if the franc moves back up and the dollar bounces off this long-term moving average, we're going to see a move lower. But right now, the market is breathing just a little bit of this long move down, opposite of gold. Just the dollar franc has just been beaten up. So we'll see what happens. Maybe we'll get a couple of dojis just like we did here before we get another push lower. Or you may want to watch the top of this wick here of the inside bar as we move higher back to, because we move down quickly, there might not be a lot of volume resistance as we move higher. As we come to our watch list, we basically have the dollar franc for the low volatility watch list, and we also have the dollar franc for the inside bar watch list. So obviously, the dollar franc was in a range yesterday after a big push down. So we have an inside bar. We traded in a range for the majority of the day. So we need to watch for a break one way or the other. And usually I'm looking for a break in the direction of the trend, but even because the dollar franc is so overextended, so oversold, even a break to the upside may be a good trade. Let's take a look at the economic calendar. As we look at our economic calendar, we can see pretty much the only thing impactful for Thursday is going to be the jobless claims number, as all of the markets try to retrace some of these huge moves down over for this week. We would like to thank you for watching our FXcast market analysis. As we continue to improve and make adjustments so that you're getting value from our videos, we want you to take the time to give us feedback, give us comments, send us questions about what you would like to see in our videos, and you can send those comments and feedbacks to analysis@fxcast.com, or you can post to our daily forum. Thanks, guys, and I'll see you next time.